Hello, this is Greg Michalowski, and this is a Forex commentary for FXDD.com. And we're going to take a look at the US dollar versus the Japanese yen as it bounces toward resistance. Actually tests resistance right at the moment. We'll get to that in just a second. But first off, I want to take a look at the daily chart here. And what I want to focus on here is this bottom trend line here. You can see this started on May 20th. We had another low on July 1st, another low on July 16th. Last week, we came down, tested that level on August 4th. And then on Friday, the market actually broke through that level as a weaker than expected employment number out of the U.S. forced the dollar versus dollar down, and the dollar yen was not spared the move to the downside. Now, the market did bottom at 8,500, always a level that if the market does hold a big figure like that, you're going to get some short covering, some profit taking, and as the market players say, uh-oh, here we go, we're going to move back sharply higher, and it did. The market moved back above the this trend line at the 85.14 level and closed the day at the 85.37 level. Now, today we come in and the range is more narrow. In fact, we have an inside trading day here with the market low coming in at the 85.29, the high coming in at 85.77 currently at the moment, currently trading at 85.74. Now, I mentioned that we are testing some resistance level. I think I did, but we are. And if you take a look at the hourly chart, now I'm looking at the hourly chart. I have Fibonacci here from the high to the low, but what I want to focus on here is this point right here, this 100 hour moving average. This is the blue line in the chart. It represents the 100-hour moving average, and it's a simple moving average, and that currently comes in at that 85.77 level. Now, since this point right here where the market started its move to the downside, falling below the 100 and the 200, that's our green line here, the market's has a lot of bars with that are below this moving average line. Now, we did have this sharp correction last week, which took the price above it here for a couple bars, above it here for a few bars, and then a few bars here. That's 5 or so hours here, about 6 or 7 hours there, and 3 hours there. So, but that and then we had another 4 hours here. So you add all of them up, and maybe you get 20 bars out of this whole move to the downside where the market tried its move to the upside, failed, tried it, failed, tried it, failed, and now we're back up to this level once again, with of course the moving average at a lower level than any of these periods right here. So there's always a better chance that perhaps we should break up to the top side. The thing that we do have that's different than these points is that we have the weaker unemployment number here, but that may still be discounted in this move to the downside. You don't really know. What we do know is that the technicals are often tell this story, and when we're at a key borderline like this 100-hour moving average, either the market's going to decide to break through it, in which case, I would look for a move probably toward this 38.2% retracement level. There'd probably be some a pause up here at the 85, 94, 95 level, as represented by this low right here, and these areas of support and resistance here. That's pretty clear to see there. So there's going to be some resistance there, but the target would be the 38.2% retracement of this move down from this high down to the low at 8,500, and that also may correspond with this 200-hour moving average, which is starting to move toward that level, and will be there by close to the end of the trading day here today. So we're either going to run into 38.2% or possibly the 200-hour moving average if it doesn't get up to that level until later on. Maybe in the earlier Tokyo session, you can kind of straight line that 200-hour moving average to the downside to get an idea of where it might be going. So all that is predicated on the fact that we got to get above this 100-hour moving average. That's the first step. If we can't get above that level, look for a rotation back down to where that would take us down back to this low right here at the 85.30 level. You can see here the market used that as a resistance level on Friday and as a support level here today. So 85.30 is going to be a key level on the downside. I would expect that we see see buyers against that level. So we should see a decision here shortly in the dollar versus yen. The market's going to have to make up its mind whether it has more buyers or sellers at this key level. And what normally happens is the market moves away from this level. It may trade around it for a little bit, but eventually it's going to move away. So be aware of that, and place your low risk trading opportunity. This is a low risk trading opportunity that allows you to risk a little to possibly make a lot. This is Greg Michalowski with a look at the U.S. dollar versus the Japanese yen as it bounces toward resistance for FX Street.